Hello guys, glad to have you on board again today. I'll try to make this one real quick, even though we have a lot of things to talk about. First, we have to make the daily review, and ahead of that, on top of that, we also have to prepare for next week, as I'll be off the market in vacations, and that might not be the best case scenario for me, as actually the market is about to make a big decision next week. This is where we'll have the technological sector in the US stock market that will start releasing the earnings, and that might be the big game changers, because let's set things straight, all the money has been concentrating in that specific sector. It's way too late for considering any kind of sectorial rotations or things like that. It's just that right now we have two options. Either the money is going to concentrate even more into the overbought sector, which is energy and technology. So it's either we're going to concentrate money in there and create very nasty bubble, end of cycle kind of bubbles. I mean, things that will go completely crazy vertical and then will just fall apart in the next following month. Or this is already too late. We have the capping in the earnings, and which means that we're not going to push valuations to higher levels, and we'll probably have to trigger profit warnings in the next following days or weeks, suggesting that people will get out of those overbought pricings, and we'll probably have to get back to major supports, which are still, and I remain on this, 10 to 20% lower than the actual pricings we have in there, and it might even go to 30% in the FENGET, which is the sector, the big major giga caps in which the money is over concentrating recently. So we'll talk about that later on. That's the big scenario, and unfortunately I've been trying to anticipate that scenario for weeks, and that's how life is. I mean, some kind of pathetic at that point, but that scenario might be about to trigger just when I take vacations, meaning at the moment where I won't be in front of computers. And just to set things straight, I really need those vacations, which means I'll be off market. I will just put a few alerts, and that will be today's tutorial, how I'll get to place those alert levels in which I'll be able to act if necessary, even though I won't have a look at the charts in an intraday basis. I'll just wait to have the alerts triggered to get into actual actions and not having any kind of look at the charts otherwise. So we'll see about that, but first we talk about the Bitcoin as usual for the cryptomaniacs, so they can move on to something else right after. I said that if we break down that support, we had to make it lower shadow. We just done that yesterday. That's perfect. As you can see, the momentum oscillator is now getting into finding its way up to crossing above zero, and that's what I'd like to see coming in the next following days. Today will be the best case scenario, because we have a lower shadow candle yesterday, making bullish engulfing today would be a good sign of a bullish strength, because as I said, I don't want the market to stay here for too long. I want the market to rapidly get back to the bearish cycle and break it up to make sure that the bearish pressure is temporarily over, and that we might trigger that retracement. Okay, because for now all the signals are bear, which means trading bullish is counter trendy, high risky, and very risky, and has to be done with low leverage. So if you followed me on the following days, I've been triggered validation of the bullish scenario in here, just got back to invalidation and back to speculative trading on that bearish candle, and right now I want to see the market breaking down the bearish signal, breaking up the bearish signal to validate the fact that we might have found a bottom, just not the way I expected it to be. I thought the market will have enough strength to break up the resistance. We might have just pull back to trigger some kind of head and shoulder pattern. So that doesn't change anything. It's just that the market didn't decide to pick the scenario I forecasted. It just took another slightly different scenario, but still heading to the same conclusions, which are we should break up that resistance and get there, and probably break this one as well. So for now, waiting is necessary. We've got a sine wave in a potential reversal zone, but the momentum is still heading to the downside, which means we need to see some strength in the price to confirm bullish signals, which suggests that if we go into a 2-hour chart time frame, putting back the levels we've been highlighting. We've been testing that support. Now it's working well. So you can see it was that price back then. Consider this as a big area. I mean, in here we've had strong support that hasn't been tested yet. We've done that. Now we've tested that price, which meaning if we're making any candle close below that price, I'm out. I mean, at that point, this is where we have got sine wave confirming by the blue triangle. Clearly, we have a divergence in here. So this is a double bullish signal, which means we now have built a support in here. So you take all the lower shadow candles. This is a support area validated by the indicators. We're still in a bullish cycle. We've been all the way down to it, which means it's highly dangerous, but we're still having a blue triangle. So this is something good, and we clearly have a momentum confirmation. Even though momentum didn't trigger the pattern, we clearly have a divergent structure in here. Two different support tested. This one clearly is divergent. Now the price has been reacting. I need it to get back to the previous resistance to activate the divergence and then confirming it by breaking up the resistance. So it's exactly the same that what we said in the daily forecast, which means we need to get there and make a bullish engulfing. So this is where I've been putting my alert. If we get there, I consider the Bitcoin scenario validated, and I'll get back to taking reinforcements and step by step moving out of speculative leverage and getting into trendy trades that we should be able to make. So first reinforcements in here, second reinforcement will be there near that resistance. I've been putting an alert here, but I should do it at lower price than that. I think that even if we go there, it's more than enough to buy. So I forecast that resistance to be broken up. So I want to be alerted in here and trigger the reinforcement if we get to the shadows level, which means the highest close is in here. So anytime we get into that resistance is the time I'll get to buy. I'll buy a resistance just to set things straight, but no questions asked. I think that at that point we'll have a nice wave 1, 2, wave 3 kind of scenario, which leaves me to believe that we'll have 90% probabilities to break up that resistance. So I might take the reinforcements below the resistance and before the breakup, but you shouldn't do it, okay? If you are beginners, you wait for the resistance to break up. You don't anticipate things, otherwise you will have troubles into different scenarios. Might work just fine in here. I'm gonna have to go, so I'm gonna finish analyzing the BTC, and I'll just review the other assets right after lunch. So let me just terminate first. So on the Bitcoin, this is what I wait for. I want to see the price making bullish engulfing, confirming the divergence by breaking up that resistance and recovering that level. It was a neutral level. We've tested it, failed it. We found the support area. Now we have it. We've got the double bullish signal. I've been taking a reinforcement yesterday. I've been telling you about this in the Discord. So now I think it's good enough to validate that reinforcement and to place a real true stop loss in here. So my scenario is not invalidating if we are making any candle close below this. We can make one candle close, but the next one obviously have to reintegrate the level. So don't get into panic mode if we just make a lower make a close right in here. It happens. I mean, it can be just like this. We make a candle closing at the low below the level, and if the next candle is invalidating it, if you just trigger the stop loss, you will have done that at the bottom. So don't be too aggressive, okay? I'll be putting alerts in here if for some reasons the market were to close below that level. Of course, you need to trigger, at least you need to have an invalidation alert there. So I'm going to tell you how to do this. You put the invalidation, okay, or you just set a ray line, or you can put a trend line, it's no problem. You just go there and you put the alert. Okay, you just trigger the alert, and you do it on per bar close, which means the bar needs to close, and you obviously want it crossing down. Okay, so once the bar closes by crossing down that thing with a close, you need to be alerted. And then you set BTC invalidation alert. That's how I do it. I mean, that's all the time. I never use true market stop loss when I speculate, because I'm not going to tell the market where my stop loss is. That's the best case scenario to get it chased down. So I'm not doing it. And if you want to do the same, you need to be aware that you have to be really careful with those invalidation. Make sure you're not going to miss the alerts, because if you do miss them and not using a stop loss, then you're going to get into very dangerous situation areas. So this is possible only to those who are in front of their computers all day long. Okay, and just to set things straight, when I do use this kind of scenario, when I go to bed, I put a stop loss at the market. Okay, because when I'm sleeping, I cannot see the alerts, I cannot deal with them, which means I put a stop loss, a lower stop loss, but I put a stop loss. For example, let's place us in a real market condition. If right now I was there about to go to sleep, my invalidation is there, I would simply put a stop loss in here. So I'll leave some room for the price to work out that area, eventually making lower shadow candles, but I'll put a stop loss right here. Just because, for example, in here, this is the lowest price we've been managing to do, anything like that. I mean, I would eventually even just put a stop loss right here, taking all the lower shadow candles we had back then, and consider that if we manage to go lower than them, it means that we're having problems. So it means that this is where my true market stop loss will be if I were about to go to sleep. But as I'm not, I'm just putting an invalidation, and if this is triggering, I'll basically have the alert on my smartphone and getting to act actively pretty quick. I mean, I can be on the chart in less than 30 seconds, taking the decision and just showing if I trigger the stop loss or not. Okay. So that's it for the Bitcoin. I still forecast now that we could have enough confidence to consider that support viable. So I've been putting some anticipation thing using the pitchfork. So you take that low, that top, that low. It's giving us the potential trend line in which I think we'll have so normally we should do it that way. Yes, normally we should do it that way, but I'm generally going to take this one. As this one is taking, yes, it's taking all the tops in the trend line. So this is what I forecast the price to do. We should eventually consider some pullback at some point, so kind of breaking resistances, taking this as a support. So probably another reinforcement in here if we're not crazy bullish reactivating. But I think that right now we can pretty much and pretty fast reach out to the mid channel, which is right here. So I still forecast the BTC to make something pretty brutal in the next following days. If this divergence is validating, I think we can be there in just a couple days. So we could eventually even terminate the weekend up here. Wouldn't be a big surprise to me. Moving on, I'll just go to lunch and I'll finish this show later on. Okay, so now we're going to cover up the global asset review, and I'm just going to use something slightly different today, because we're going to use a multi-asset review just so you can have a clear view at what's at play right now, what's ongoing, what are the real dangers that the U.S. equities might be facing in the next following days, and we'll see about this. We clearly are at a turning point, and it's going to be forecasted by the next week's release. Clearly, next week we'll have some stock releases of earnings, and most likely we're going to have the first technology sector releases, and these are the most dangerous one for many reasons that we're going to explain right now. Is the fact that the U.S. Market is pretty much playing two speeds. I mean, we're having a lot of assets underperforming the global market, and we have just a tiny fraction of assets clearly overperforming, not to say that just they are the one who are making all the gains lately. This is the technology sector. We have a little bit of energy sector as well, and then the sectorial rotation that has been ongoing for the latest weeks. I mean, this is a sectorial rotation that allows the price to hold the valuations even though investors are taking profits. Okay? Sectorial rotations means that we're going out of sectors, buying others, getting out of sectors, buying others, but this is short-term scenario. This is stock picking. This is what we see generally on the wave 4. It's when we get out of a wave 3 that has been trending, you take the profits out of the trending, and generally we have the final bullish impulse, and then the market collapse. but the wave 5 can be what we call truncated, which means that the wave 5 doesn't necessarily have to go higher than the wave 3, especially in that case when our wave 3 just went crazy high bullish with kind of a speculative move right here, totally nonsense, nothing was there to support the market, but just crazy heavy speculation and bubble kind of trading. We've had the crash following this. At least the crash in valuations has been erasing all those prices in a few days. And I think right now the market is forecasting us to get back there, but I think we won't. And this is what the market is about to choose in the next following hours. We've got multiple things suggesting that the level of risk has been reaching the tipping point I've been forecasting for weeks. So I think the latest thing possible to make Wall Street keep on looking for the upside is the actual profit release, and we'll see if they're good, if they're not, if they are just following the consensus and whatever. But just to set things straight, right now Wall Street has to clearly overbid the expectations in order to create a bubble. If they fail doing it, if they just pick the consensus or even fall below the consensus, nasty parts are down the road, which means I think right now that the sectorial rotation is over, which means that the trendy asset trader have taken their profits, which leaves us with two options. Option number one, we go into speculative trading only, which is a short-term bubble kind of trading, in which I think, as we have no longer sellers, look at where the sine wave target is. It's 3,000, which means that we have two options. Either we go into 3,000 and eventually slightly higher than that into a crazy bullish move, just led by the profit gains, and let's set things straight once again, the profit might just be into some specific sectors that the market will try to buy for a final move and then just get out entirely of the market at a long-term perspective. Because if you remind me, we're in the weekly time frame where the trend is about to terminate. And it's either we terminate here with a truncated wave 5, or we terminated slightly higher, breaking up that taking profit pattern, reaching out 3,000, but after that, this is really end of the world. And this is just, not end of the world, but you got me. It's just what that will get into market top, and the market top means that we'll get into retracing the entire economic cycle, which means recession kind of trades that you don't want to be buyer of. So it's just pure sense in here. It's rational trading, and remember, you can trade irrational into short-term trading. You cannot really trade irrational for a long time when it relates to weekly chart or monthly charts, simply because right here economy is at play. You cannot trade without macroeconomic at that stage. So if macroeconomic is deteriorating, obviously the price will have to do same. So be really, really cautious with what you're doing right now in the US stock market. First of all, we have high risk of having a truncated wave 5, which means that we'll get to retrace there once again, trying to pull back and then fall apart into bear market. So this is the first option to me. If we do this, we kind of go down, 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 and actually we find no buyers, and we actually get into recession kind of trades. So I don't think that this is going to be into a straight line either. I think we're just going to get there. I mean, first bearish impulse, second one, then we get to some kind of retracing in here, and then we just get to the nasty recession trades. And we get back to the major support. And this is what I think is the highest probability right now. But so far, Wall Street's nothing close to price anything like that. Okay? So it's just Wall Street see that everything is going to be fine, that we'll have the expected profits. But now we're going to have a look at the correlated indices and things that suggest that investors are not just taking their profits, they are also heading towards safer areas. And we're going to see this. First of all, US oil. This is right here down below. It's really, really dangerous thing that is at play right now with the US oil. We're on a weekly chart time frame, so what you see right here is an evening star pattern. We're clearly going to close there that week, which means the US oil is now bearish. And just to be clear in here, a bearish US oil is not supporting anything like growth. So if we go up, it's just a speculative bubble, which means we go there, then we just fuck everything up and we just fall apart into a crashing market. So option number one, we go down here and we just get into a normal kind of recession trade with just a consolidation and then afterwards entering bear market territory and just waiting for new economic cycle to buy again. And I think that support will be more than enough to buy equities at that price, and that will just be a 30% drop, buying 30% lower for the next economic cycle, in which I think economy and pricing will be related and possible for long-term trades and long-term investment cycle. Right now, investing to the long-term trend is absolutely stupid. How the hell do you want to invest buying the high? You're just buying at the low. When you invest, you're buying a market that is falling. This is what you do. I mean, this is where the long-term calls were made back then. The market was falling. This is where you make long-term investment. This is not where you do it. We're building a market top. So if you think that you need to buy right now to make some savings for the next 5 to 6 years, how stupid that behavior is in terms of investment, that's just pure nonsense. So don't buy right now thinking that this thing will go up for 2 to 3 years. It's just probably going to be divided by 30% if we want to be honest in the next 2 or 3 years. So wait to have better price to buy is the only choice right now. It's just wait and see. If you don't want to sell aggressively by speculation, just wait. But US oil is giving what I've been waiting for a long time. I think US oil has been terminating its two-wave corrective waves. We've been heading towards 75. I expected the price to go slightly higher to eventually 80. We haven't, or eventually, well, we might do it if for some reasons next week was to be bullish. But anyway, now the days are counted regarding the US oil. We are triggering that taking profit pattern. We have a double bearish signal in here, and the momentum is now failing to reverse, is now failing to break up. Okay, so what we've done in here is just that we've created a bigger resistance level. Back here we had the double signal, the market tried to break up, failed in here, reintegrated, exited the resistance. I think right now all we can have is tiny pullbacks in there, then we'll all be sold. So I'm waiting to sell the US oil for sure. We'll talk about this one later on. I just want to stick to technical indications right now. So just to be clear, US oil is now bearish biased, which means nothing close to forecast growth in the US. So that's the conclusion you want to take out of that chart. It's a weekly chart. So once again, we're taking care of big trades in here, not just something that is obviously going to happen tomorrow. Can take a couple more weeks or a month to take place, but this is what the next swing probably is. It doesn't suggest the market is going to create a bubble. It most likely suggests the market is getting to safer areas, and we're going to move on to this as switching to the gold. If we have a look at the gold, what we see right now is nothing close to a bearish market, as we have to go higher than that in order to terminate the consolidation. And from what I can see, we have very high probability to build just in here a consolidation, pulling back to support. We might be trying to break this one, but we're obviously not going to break that one, which means I think we're going to trigger another bullish cycle pretty soon enough. And whenever we'll have done that, we're already oversold in terms of momentum, oversold into a bullish versus taking profit kind of signal. I have no doubts that the taking profits will fail and the bullish will take it over at some point. It's just a matter of time. Wall Street's been fucking up with all the risks markers. They've been forcing the investors out of those assets just to force them into stock market and into dollar. But at some point, this is something that is going to reverse. And I think that the dollar will be sold, or at least consolidate, which will leave pretty much big room for the gold to perform. And if the risks is pulling back at some point with is getting back to play with the US equities falling apart, then you can be sure the gold is going to be where the money is going to flow very aggressively. And we've got one big resistance in here. Okay, this is big resistance area down here. Yeah, I think this is where we're heading to. And if things are really getting dirty, I think we can eventually even extend to this for the gold, which is pretty dangerous. And just to be clear, that's the price most of the bulls cannot even imagine, because to them gold needs to be sold as things will be pretty forever and equity will just rise with no limit. So everything suggests that's not the case, and we'll see if I'm right or wrong. And final asset we're going to analyze. So be aware that in the gold, we might having some short-term manipulations in here, but we've already broke the previous week's high in here, which means that all we'll have in here is just an extended move, just to push the divergence, trying to trigger some stop losses, but I'm not going to give mine. My stop loss will be below that low, and I think the market will just fail right in here. So it's being kind of patient right now, and either the gold is just wrong-footed, or we're just making an extended move to trigger some stop losses, and right after we'll have a nasty bearish, bullish reversal, probably an aggressive one, which means that we'll go there, close at the low, and the next week probably is going to close at the high. So we'll see about that. It all depends on the earnings, and especially the earnings of a few assets. We're going to conclude with this. First, we move to the yen index. Yen index in a weekly perspective as well doesn't show any sign of weaknesses, more likely is a bullish market, yet consolidating, which means the overall big trend in a monthly chart is bearish, which suggests the fact that we might have another economic cycle afterwards. So not the end of the world. I don't think the world is about to collapse and we'll have a total economic warfare or a total economic fail, but there is risks of the market to do it, but from what I can see, it's just short-term risks that we're going to flush out things, and if things are still great, I mean, if the Eurozone hasn't imploded, if for some reasons we don't go into World War or things like that, I mean, if things are doing great and we're just doing a recession, economic recession, I think the next economic cycle will be just great. But this is the one I want to invest on. I don't want to invest on a finishing cycle. Yet that's what Wall Street is trying to sell you right now, that the economic cycle is still ongoing, that no problem, we'll still keep on rising for years. I don't think that's the case. I think we're going to have some deep pullbacks first. Yen is also suggesting this, that we need to have a C-wave correction. As you can see, this is clearly a bullish impulse. We've been breaking resistances, clearly is an impulse. 5-wave to the upside, A-wave, which means the corrective is probably going to be ABC structure. The wave C is always breaking the wave A's market top, and more likely is generally the same, most generally the wave C is even more aggressive than the wave A in terms of timing, which means look at how aggressive this was last time we bought yen. We could have something at least similar, not to say it could even be much more dramatic in terms of amplitude. So I don't know how deep this can lead us. All I know is that I have a resistance in here and another one in here, and all I need is that the wave C is going to play in 5 bullish impulses, and that those bullish impulses should lead us, toward at least breaking up the A wave. So first target is right here, second option is right here, near the 100% extension or the 127. I don't know which one the market will pick, depends how deep the recession could be, but I think anyway, the next 2 years, a recession is down the road. So you can buy market, whatever you think, do it very short term. If you're buying right now, all you can expect is a crazy short term bubble, but right after, we're probably going to fuck up all those who remain bullish in that market. So don't be bullish too long if you want to be bullish and follow the trend. This is the conclusion I wanted to get to. And now we're going to switch to a few other assets I want to compare. So we're going to keep on having the SPX. Now we're going to compare it with the NASDAQ. We're going to compare this with the FANGAT, which is what we call the FANGAT index. It's just basically adding Facebook, Netflix, Amazon, Google, Apple, and Tesla. These are the best market leaders of the latest few months. Let's say the latest bullish run is clearly driven by those, and we're going to talk about them. And then we're also going to take care of yields. Junk bonds, we can talk about junk bonds, which is Greek danger, but we're actually going to cover up the VIX in here. So now again, we delete all the visual assets, and now we're making a correlated reading, okay? We're taking all those assets in a long-term trend, and we're studying that trend. So what do you see? First, the Nasdaq is the one that is leading the gain inside the SPX. Yes, also the Russell 2000 is performing, but not that big of a deal. I mean, we're clearly overperforming into the technological sector. So technology is leading that market. Second thing that we need to see, look at this. Technological sector is already showing signs of weaknesses. We already have a bearish momentum, yet the prices are still bullish, which means we have price distortion. We have a divergence. The momentum suggesting that we're losing strength, yet the price makes you believe that we are gaining strength. So two options in here. Either, as I said, we create a nasty bubble and things will go pretty much vertical with the assets we have right here, and this is what we suggest the Feng Man is about to do. As the Fenget we have right here is just acting like a superhero. It's been overperforming the Nasdaq, which is already overperforming the SPX. So this is what's at play right now. This is what we call money concentration. We are creating bubbles. The money is getting into areas where we perceive the growth is, yet there is no more growth to make, because at some point we kind of find the profit roof, which means that we find the profit ceiling. We cannot make more profit than this ceiling value, and whenever we find it, all the bubble explodes. All the speculative bubble explodes at the same time, which means all we've been buying crazy highs on the Fenget index and on the Nasdaq and technology sector is just going to fall apart whenever we'll find that ceiling value. And the question is it going to be on that quarter or not? Which gives me too precise timing to trade bearish right now, either right now, and the profits will not be there to support the prices, and we'll have profit warnings all around the sector in technology, and basically everyone's going to exit that bubble, and we're going to see that there are not enough gains for everyone to pay those prices, and most likely not enough profits in the corporates themselves to support paying all those prices, and basically everyone is going to try the selling at the best possible price. Everyone selling means the price will sharply drop, and that means the crash will trigger. This is a bubble trading. I mean, we clearly see that we have the parabolic move, and we're losing the momentum, which means losing momentum in a parabolic move, nearly getting to push to the end. So it's either we find another strength momentum to push one more bullish wave inside the parabolic move, which means now any new bullish move needs to be even more aggressive than the previous one. So we've been pretty much vertical in here. We can do it one more time, but it's going to be the last one. Either way, even if we make a crazy bubble, I think that we're not going to make a 2019 is obviously going to be a negative year. Any way, I think it's going to be. It's either we terminate negative in 2018 or in 2019. But either one, obviously one of those 2 years is going to be negative, and not just a tiny negative. I think we're going to have at least a minus 20% on 2019 if for some reasons we kept on holding 2018 to the upside. So it's either right now on Q2 releases. I think Q3 is not going to be that much of a game changer. So if we're going to the upside right now, probably going to the upside for 6 months, but that's it. I mean, probably Q4 releases, so early 2019, the results will obviously be disastrating for a very simple reason, is that we're always comparing the quarter's release to the same quarter a year ago. So the quarter will be assessing that year. So look at Fenget, okay? So this is the current quarter. So we're going to move on to the daily chart, which we have the quarters, okay? So this is where we ended up the quarter, okay? So we're going to try to compare this quarter to the quarter 4 quarters back then, which is right here. So as you can see, we had a pretty nice bullish quarter back then. Another one in here, even more bullish. Back then, we opened there. We made an entirely bullish quarter, okay? So this was back then. Quarter 2, we've made 14% return at the best, and we terminated and we closed at 10% return. Now this is what we've done that month. We've been opening at the low as well. So same thing, all the way up, all through the quarter. We've been making 30% return at best and closing at 22%, which means we have to beat 2 times the profits we've been making on Q2 last year to get something that relates and valid the price movement we've been making on Fenget. So to be honest, we just don't need to have pricings, to have releases. Getting to the consensus, we really need to beat the consensus and to beat it hard in order to trigger the bubble. Otherwise, probably profit warning, and we're going to go to the downside, which means taking profits on very, very much overbought assets that have been leading all the equity pricings lately, which means equities will basically go down, indices will go down, and those stock markets will fall apart. I mean, that sector, that bubble is going to burst, and when the bubble is bursting, it's not doing pretty. First, we're breaking supports, we're triggering all the stop losses, so you can be sure there are lots of stop loss in here, but I bet there are lots in here as well, which made me believe that if we do fall apart in the technology sector, and especially FangMan, we might go there, which is 25 on the index out of 41 that we're currently trading, which means we could lose more than 30% on that specific 5 asset sector. So great danger down the road if that's what's about to trigger, and this will clearly where I'll be putting an alert next week. I'll be off next week for some vacations, but you can be sure that if we're making any bearish candle close or bearish engulfing pattern on that thing, I'm ready to jump in, and I'm not going to jump very tiny. I'm going to put reinforcement on Apple, Tesla, Facebook, Nvidia. I'm going to take all those trades again. I've been flushed out on Facebook. I'm still having tiny speculative leverage in here, so I'll reinforce Facebook, get back into Netflix where I've been stopped at, reinforce Nvidia, reinforce Apple, reinforce Tesla, probably going to take Google as well. I'm going to take Boeing and not Amazon. Amazon, I'm going to stay out of this one, but for some reasons, this one might be just fall as well. So as I said, we've got a lot of room inside the gold, inside the yen. Both of those assets suggest that we have one more bullish impulse to make in a weekly to monthly basis. So risk is down the road. It's just that right now Wall Street is trying to avoid this. And as you can see, the VIX has already priced that thing, and that will be today's conclusion, leading us to that big next week. And as I said, it's just that we have a precise timing showing up next week. I don't know what the market will do. We clearly have two options here. Either we make a tiny wave 5, and we're already done that, and the VIX is going to be divergent. Second option, we make a long wave 5 with a bubble that will probably last 3 to 4 to 6 months before picking up, and then we're going to crash the entire market and explode all the bubbles, which means the Fenget bubble is going to implode, and it will force the Nasdaq bubble to implode as well, probably force all the equity to the downside, and will obviously force right after the bond market to explode, which will force the real estate bubble to explode. So it's just be bubble one after the other to explode, and it's just I mean, that's how it is. At the end of cycles, we create bubble, we accumulate money into sectors, and then those sectors accumulate too much money to get back, they create bubble, they burst, and then there's not enough money for everyone, and then we figure out that this was just Ponzi schemes. So that's how it is. Bubbles are like Ponzi schemes. Everyone is getting in, thinking of easy gains, and then when nasty parts comes down, we realize there's not enough gains for everyone. Lots of people are losing a lot of money. We're triggering lots of stop losses. Recessions kind of point out, and that's how it is. I'm not inventing this. This is how the market economy works. So anyway, moving in here, what is the technical I have regarding the VIX? And we're going to make a pretty solid analysis right now today. So how do you highlight a wave 4 into the stock market when it relates to trading with VIX? You generally make wave 4 when the VIX is breaking a resistance. I mean, making new highs, making a higher high than the previous high. So let's set things straight. Right here, clearly was a sub wave 4. It obviously is. This one as well, we've been breaking high, so it's sub wave 4 of a higher degree, sub wave 4 of a higher degree, sub wave 4 of a higher degree. This is what we've done right now, which leads me to believe that what we're doing right now is the wave 5 of the biggest market count, which is the economic cycle. So we're clearly reading the end of the economic cycle. It's just a matter of time right now. And the fact that we've been doing this suggests me that we've been making wave 1, wave 2, wave 3, wave 4 and that we're making the final wave 5. And generally, the wave 5 is not making new lows. Okay? Just to set things really straight. Whenever we make wave 5, we generally fail to make new lows, which means this could be the market low in the VIX market, which suggests that you can draw that trend line and we're probably going to keep it that way. Okay? Which suggests that we're not going to make new lows on the VIX anymore, and if we're not, then guess what? It means that the US market, and especially the SPX, is not going to make a new high. Or if it's doing it, it suggests that we're probably not going to be able to create a bubble. Because if we follow that cycle, this is the two paths we have. Either we fuck up the economy and get into exploding the Fanga bubble in the next following weeks with the release disappointing the market somehow, or the market thinking that's good, we've got enormous profits on those, and then we'll have this. A market that is not respecting the pattern, probably going to get to new lows in here, not new lows there, not going to make it. We're not going to return to below 10% level. It's not possible. But we could do this, extending some kind of bubble toward the end of that year, and then this is when the market will pick up. And for those who've been understanding, to see if you understood me well in here, I'm just going to leave you 2 seconds to think it straight, but this is what's about to come, okay? So next time, as this is wave 5, we're gonna as this is wave 4, we're gonna break up highs, which means we're gonna go there on the next bullish. The next time the VIX will trigger, we're going probably to heading toward 50 or probably even higher than that. So we're gonna probably make higher highs. So 2 options: either we're already on the road to do this, or we're gonna save us some time, create a bubble in here. But as you can see, that doesn't really suggest the market is able to do it. But if it's doing it, we're not going to make new lows from there. We're just going to go there, finding a rock bottom structure out of 10, probably just getting there and probably slipping below 10 just to, make the headliner thing that VIX is once again below 10, whatever. But I think whenever you will see this, that will give you the bottom, and what I will be searching for is a subwave 4 pre-signal, which means anytime the VIX will break and make a higher high than the previous one, you'll know that a crash will be in the next following days or weeks. So if we take option number 1, great, I'll be right, I'm shorting US equities already. For now, I only have stocks. I will be ready to short equities if I see signs of weaknesses throughout next weeks, and I will obviously short back the SPX, NASDAQ, your Dow Jones. Everything's going to be shorted to me. Option number 1. Option number 2, nothing is showing up. We go all the way through the economic, through the quarters release, and things do great. Nobody is changing their mind. The bullish trends are ongoing. We're making new low, higher low for 2 to 3 months, and anytime I have the pre-signal of a VIX making a higher high than the previous one, I'll get into taking very aggressive short entry on the following next market top. Okay, consider it as a wave 4. Wave 4 doesn't mean that you need to short. Okay, so whenever we'll break the highs, doesn't mean I have to enter immediately. It will just tell me that the next market top will be the one to take as a crashing market top. So you know how I'll be trading. So you know what I'll be watching for next week. But I'm doing that very long show today for a single reason. I'm taking vacations next week. I know that's the worst ever timing I could have done. But I mean, sometimes that's how life is. It's kind of paradoxical. It's the fact that I've been working my ass off that scenario for weeks, not to say months. I've been working that shit since then. Since the late stage of 2017, when we managed to make wave 4s in here. This is the moment I've been trying to short the equities. I've been failing, and the market just fucked me up with all the volatility sellers back then. They've been doing me the same thing early that year, and the question is whether they'll be able to do it a few more weeks or months before releasing it. But at some point they're going to be wrong, and whenever they will, I'll be there to take the gains. So it's just a matter of timing right right now, and I'm no magician. All I know is that there is a timing upcoming right now. If that's not the good one, then I'll patiently wait, let the bubble create itself. I'm not going to take a single bullish trade. I'm probably going to have to exit all those. I mean, I'm going to give away my Teslas, I'm going to give away my Apple, going to give away my Facebook, going to give away my Nvidia and things I have in portfolio. I'm going to have to take either break-even losses or actual losses on those trades. But if that's the case, then I'll have to surrender. I'm not. Remember, when you speculate, never ever hold on to your trades. No sell and hold. It's not going to work out. So really understand me well. I know lots of you guys think I'm over bearish. I have a big bias. I'm a perma bear. I've been selling equities forever. I mean, just cut the bullshit. I'm no fucking perma bear. I'm just a trader, and all I think right now is that the returns out to the downside, which suggest I am trading accordingly. That's just it. So now think smart. Stop thinking narrow and putting people into boxes, either perma bullish, perma bearish, or good trader, bad trader. I'm just a trader. I'm speculating, which means I can be wrong. I can be wrong multiple times in a row, but at some point I'll be right. And all I care about is when I'll be right, not how many times I could be wrong in between. Because being wrong doesn't cost me a lot. It's tiny losses piling up whenever I get fucked up many times in a row, and that's what happened recently. But whenever I make just one gain, first of all I erase all the losses, I take a pretty nasty gain, which makes me positive. And this is the only reason why I keep on doing this thing. It's because I know in the long run this is a positive outcome. And that's why I'm not resilient. It's not that I have a bearish bias. It's just that I know that right now, sooner or later, it's going to work out. And I obviously want to be part of this. That's just the only reason I'm doing it. Remember just back then, when I was the only one keep on shorting that market that was just going crazy higher each and every day. I said I remain bearish on that market, and all I search for is bearish trade entries. I was right at some point. I took a short entry right here, and I got right. Meaning that all those who've been switching and said, okay, I'm going to stop selling, I'm going to let go of the market. No, you don't let it go. You just wait and see to see some flows, to get in and take the gains you've been waiting for. This is what I'm doing right now. I'm taking my chances right now. If it's not the right timing, then it's going to be the next one, and probably going to have a bubble in between, which means I don't want to remain a seller first, and secondly, if I'm right, it's going to drop fast. All right, you know everything. I'm going to leave you guys on this. So next week I'll be off the market. There will be no daily releases, no daily follow through on the Bitcoin. So remember what we've been saying out there. There's really a two-option scenario as well. Either the Bitcoin is just falling apart, or the Bitcoin is finally showing some strength with the bullish momentum we have on the daily chart. We managed to find a bottom in here, and then we can clearly build a trend with a higher low, and we'll make obviously a higher high next up right after this. So really being cautious right now, not a single chance to get out of speculative leverage until we manage to restore some strength and validate the bottom we have right now. We have a support kind of signal. As long as we remain above that support, you need to remain bullish biased. If we sleep through this with candle closes, triggering invalidation, I think is the wisest choice to make. I've been clear on this with you since the first day. I will cover up that scenario from the start, from the entry to the release. So if I take the loss on that scenario, even if I'm on vacations, I'll make a video out of it. Not necessarily a video if I can't handle this, but at least you'll have a tweet, you'll have a message on Telegram. If I trigger my stop loss, everyone will know about it. I've been clear about this. I'm not going to hide from it. If I'm wrong, I'm going to tell everyone about it. If I'm right, you'll see as well. So don't don't be worried. I'll tell you what I do, because I know lots of you guys just follow me just to know what I'm doing. So I'm not going to hide away by being in vacations. I'm going to follow that scenario, of course. And this is one of the scenarios I'll keep on going during the vacations. This, I'm watching closely, as I said, the US stock market scenario to see if it's triggering or not. And I'll have a look at this throughout all the releases we'll have. So you take the economic calendar, you go into earnings calendar, and you have a look, and you put a very red mark onto any of those Fenget assets. Any day they are going to release, it will be really important to see how the futures market will react. You know that the release of the Fenget are always done after the closing bell, which means the cash market is going to close, and then we'll have the release. And whenever the release comes, the futures market is going to gap the next day. So you don't hold positions on that day. All you can do is trigger some futures positions, and it's going to be a bet. It's kind of a bet. It's either right or wrong. If we gap up, you can be sure that it's going to gap up a lot. We're probably going to gap up the resistances. I'm going to pause and watch out for the economic calendar. All right, so next week we'll start right on Monday with Netflix with an expected 0.8 return. Not necessarily going to be matched by the market, but just to set things straight, Netflix is the biggest ever bubble into the Fenget thing. So if Netflix is performing higher, you're probably going to have a clue that the market wants this bubble. Just having a look at this, I mean, if you're just going there and taking Netflix, and look at this, I mean, it's clearly Netflix wants it to be to be good, and they really well want a gap up, which means if we go there, I think the next technical resistance is 18% higher. So if things are doing well on Netflix, they're probably going to gap up for 10%. Or not necessarily 10%, but they're going to make a big gap. They're going to gap you up for at least 3 to 4%. So if you remain a seller of Netflix, just do it with a leverage chosen wisely and accordingly. If you cannot handle a 5 to 10% up gap the day after release, you are pretty much exposed to risk, and you can just blame yourself if for some reason you're taking a big loss out there. It's heavy risks on that scenario. Second option, Netflix is not beating the consensus. It's gapping down, and the gap down will be devastating. I can clearly see that thing could gap 15% downward if that was to come. And if I had to give you a clue right now just about Netflix, I think among all the releases that we could have throughout the next week, I think Netflix might be the strongest one. So the concern I have right now is the fact that, first of all, this is not looking like a market about to crash. First, it looks like a market that wants more gains. So I expect Netflix to eventually get to the consensus or eventually beat it for for many reasons. This is the quarter we'll be compared to, okay? So we're going to compare that quarter, which has been pretty much hell of a quarter, just to set things straight. We've been opening at the low and closing at the high, making 46% return. So just to compare this, 46% return from the opening to the close of that quarter, as back then the previous quarter was doing here from May to, we've been making 0 return, okay? So obviously, quarter on quarter, the benefits needs to be skyrocketing on Netflix to justify the price increases we've been making right now. So it really needs to be skyrocketing results on Netflix, but I think that might be the case. And if that's the case, regarding the current euphoria on the market, I mean, Monday could be a good day for the stock market, and especially for Netflix. If for some reasons it gets the consensus, we could have a gap up on Tuesday with the equity market. So the fact that we're starting up with Netflix might not be a good sign, actually. So we've got some bankers on the same day, but I think everyone's going to have eyes on Netflix. I mean, it's clearly where the thing is. God damn it! Yes, we're going to do it. Yes, I want to have a Right. Okay. So, and then the day right after, we're going to have Goldman Sachs. It's going to be a good one, but the bankers are not doing pretty well right now. They should do it, but we'll see if they've been making nice gains with the raising rights or not. But I think this is just what we'll have a look at. But first, we'll have had Bank of America and all the things that will give us some clues about what the banker sector is about to perform. Then we're going to have... I think Morgan Stanley could be useful as well. We're going to have eBay. This one's going to be interesting, just to forecast what Amazon could do. Amazon, big guy, of course, so we're going to take that. AMD is going to be key, and not to say essential, to understand what NVIDIA is going to do. So this one obviously isn't necessary. What else? We're going to have Microsoft, big game changer as well. So as I said, it's a big, pretty nice next week. We're going to have the first technological sector releasing. But as you can see, we're just having Netflix. Out of the Fenghet, this is all we'll have next week. We're going to have GE. This one, I want it, but to me, I want it for my scenario. I hope General Electric is going to outperform just to trigger the bullish trades. Because once again, I'm not just selling everything. I'm not stupid. I'm just selling what deserves to be sold. Just buying what could give us some gain. And that's how it is. So let's say what the week right after could show us. So yes, we've got Alphabet right on Monday, next Monday. So this nasty, really nasty. Then we'll have AT&T, interesting, but not necessarily that big of a deal. Apple on Tuesday. So might not actually just be next day with the big market movers. Could actually be just that week I'm focused on. Because to me, Apple is amongst the weakest and the one that should have the most chances to miss the consensus. I mean, we're expecting crazy high valuations out of a very big market cap currently, which I think is not going to be holding on for a long time. So we'll see about that, but we'll see how this plays out. It really is, it's kind of a betting in here, unless you have information. So we're going to have Boeing in here, pretty much interesting as well. We're going to have General Motors. This one is important for Tesla. Okay, going to have Qualcomm, but not that big of a deal. I mean, we'll already have the results of the others first, so I'm not necessarily concerned about Qualcomm. We're going to have nothing else interesting in here. Then we're going to have Amazon on next Thursday. Oh no, sorry, on Thursdays 2 weeks ahead. We're going to have EA Sports. Can be interesting to forecast from NVIDIA gaming demands. But what the hell, where the hell is NVIDIA? I mean, I hope this is not that day either. Okay. Where the hell is NVIDIA? Right, one more week eventually. American Airlines will be essential as well to see how the plane businesses is doing. To understand about Boeing. It's just for having some clues about Boeing. So that could be interesting. So let's say the next week. So where the hell is going to publish NVIDIA? Maybe I've missed it. Okay, no problem. We're going to do it. Because to me, NVIDIA is the most dangerous one. Results. But can you give me the day? We'll have him. Publications. Okay, so it's on the 16th. Okay, so it's pretty much in a month. Okay, we'll be a month ahead when to get NVIDIA's actual release. So we'll see about that. So first game changer is going to be Netflix, and as I said, suggesting that we might have a bubble extension right on this one. We could clearly have one more crazy move. Not going to last long. I mean, could just last a couple weeks. But we might eventually consider the risk of having Wall Street picking that scenario regarding Netflix. The outcome is going to be the same, okay? It's not going to change the final outcome. This thing is going to burst anyway. But it could take some time before doing it and making one more bullish impulse. So for now, I've been right to get out of this one. It's too aggressive, too speculative. But you can be sure if that thing is showing some negative returns on the I mean, if the price is dropping after the release, you can be sure that the thing is going to crash. So you can short eyes closed right at the open the day right after. So this is what we'll do. And if it's doing it that way, then have a look at all the other Fengets. This is what will be the game changer. If for some reasons people have been buying ETFs, thinking that this Fenget thing is going to go forever upward, and most of the retail traders have been doing this lately. They've been buying equities at extensive prices, thinking that this will go up forever and that there is some gains to make out of this. If they've been buying ETF and trying to figure out that the market is about to reverse, they might be panicking and trying to sell the whole thing, which means Netflix could just trigger a pre-selling signal on Fenget by selling Tesla, Apple, and everything in here by just releasing ETF. They've been buying what's rising, and if they see that what's rising is now falling, they might be pre-selling them, and they will sell the whole package, meaning they will sell Tesla, Apple, Google, Facebook, Nvidia, Amazon, Boeing. They will sell all that shit at the same time just because Netflix is not performing well anymore. It's just like that. It's, as I said, it's a switch. Whenever we'll switch, we're not going to get back to the previous psychology. It's either we're over bullish and we keep on doing it as the results suggest we can keep on doing it for a couple weeks, or the switch is switching right at Netflix and this is game over. Okay, so we'll see about that. That's the final conclusion in here. So be pretty much aware of. It starts on Monday, right, by Netflix publishing at the close, and we'll see how it is. And from what I can see right now, Netflix is not trading any kind of danger. Investors think that this is just going pretty well and that they will have pretty nice and easy gains. So remember that this is the psychology we have into every bubble. So let them make their gains if that's what's about to come. If you want to play this, don't forget to take your profits right after the next burst, because it's not going to go to the moon forever. If we go to 500, that will be the big number. But that's probably where we'll release. It's just like the 20,000 in the Bitcoin. I mean, right now, to be honest, I think that we might be able to fail just right here, which is 407 dollars, and so means everyone is going to forecast 500. We're not going to get there, and we're going to fall apart. So wait for this, be patient, be really aware that there is great danger out here and that we're already ready to get to the downside, but I don't want to play this one too much risks with Netflix alone. I would have traded Netflix to the downside if I had other releases first, but as this one is going to open the show, it's too risky to play 50-50 scenario, as we can gap up 5 to 10% and we can gap down 5 to 10% as well. So it's not something I'd like to speculate on, as it doesn't go further than just a bet. And I'm not betting, I am trading. So if I miss the shot, no problem. It wasn't worth a trade at that point. Okay, so goodbye guys, trade safe, don't take too much risk. Eventually even the best case scenario now is just to be a spectator out there and just waiting for the price to make a decision during the next following weeks throughout that releasing timing, and just wait for the market to take a decision and then just follow what the market will do. If it's going to the upside, don't follow it. If it's going to the downside, follow it. If it's going to the upside, you just wait for it to pick up, and whenever the peak will be there, just go and wait for a support to break down. Whenever that will be the case, just get in. Okay, bye-bye, trade safe, and see you in 2 weeks.